the equilibrium interest rate, or R star, is as obscure as Brexit is prominent. The equilibrium interest rate is the interest rate that, if the economy starts from a position with no output gap and inflation at target, would sustain output at potential and keep inflation at target. Now, R stars isn't a direct guide to setting a monetary policy. Rather, it's a way to think about the forces acting on the economy and whether policy as a whole is stimulative or contractionary. The appropriate level of bank rate depends not only on the level of R star, but also on the need to close any output gap that might exist, or whether shocks merit varying the horizon over which the MPC seeks to return inflation to target. And as you know, the MPC published today its assessment of the factors influencing R star, or the equilibrium interest rate. And the key messages of that box are that the level of bank rate consistent with output at potential and inflation at target has fallen significantly from pre-crisis levels. This has been caused by both structural forces, such as productivity and demographics, and shorter-term forces, such as uncertainty and private and public deleveraging. Both of those have pushed the equilibrium rate down further. As a consequence, even though bank rate has been very low, the stance of monetary policy in recent years has been mildly rather than wildly accommodative. Indeed, the facts that today the economy is near full employment and core CPI tells us that the combination, and that core CPI is at 1.9%, tells us that the combination of historically low rates and asset purchases 2 years ago was about right. Tighter policy then would have led to worse outcomes now. The box also provides context to our long-held guidance that rate rises are expected to be limited and gradual. Limited because we think those structural factors that have pushed down on the equilibrium interest rate are likely to persist. And gradual because we think the domestic shorter-term factors, particularly those headwinds from uncertainty and fiscal drag, will fade slowly. As a result, R star can be expected to rise gradually, and policy needs to walk, not run, to stand still.